Hey, have you ever wondered how SBA lenders navigate the management experience question? Whether you have enough or nothing at all in the industry you want to buy into. What about down payments? Where the money is coming from? Can you get away with 5% down? Or what about 0% down? Is that even possible? Well, how about the navigating the complexities of closing the loans once it's approved from the lender's perspective? That and more, because today you're in for a treat, because in today's video, I'm going to be interviewing Angel Rosario from Northwest Bank, one of my partner lenders that helps in my group coaching program. He's going to tell us everything about what goes on inside of an SBA lender's mind. Let's get to it. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy and scale a profitable business. If you are a small business owner looking to increase your wealth by buying a profitable business, or a W-2 executive or employee wanting to get out of the rat race by buying a profitable business, you are in the right place. Please subscribe to my channel and don't forget to hit the bell, and you'll be notified every Thursday when new content comes out.
So, as I said at the beginning, I am thrilled to have here on my channel the one and only Angel Rosario from Northwest Bank, whom I've worked with, done multiple deals for over a period of time. He's got the real deal, and you get to hear from him today. Angel, welcome to my channel. How are you?
I'm great, Neil. Thank you so much for the kind intro. I'm super excited to be here, and hopefully I can provide some value to your viewers.
Awesome. Okay, so I asked Angel, about some of to give me a list of the hot topics in an email, and he did that. And let me tell you, oh boy, we're gonna have some fun with this. So what I'm gonna do is I'm gonna ask you about some of the topics, and I'll feel free to go for it. Talk about anything and everything you feel that is appropriate for the topic, because I want our audience, Angel, is looking to buy a business, and you're the one that can help them do that as the lender, the SBA lender. So first topic, management experience, transferable and direct. Go for it. What are your thoughts?
Yeah. So this has come up. This comes quite a bit. One of the things that all SBA lenders look for is experience in the business that buyer is buying, right? So there's two types. There's direct experience. So an example would be, current FedEx operator or purchasing more FedEx routes, right? Pretty simple, basic. They understand the business, understand the intricacies of the business, understand the quirks of the business, and there's a good chance that they're going to be successful in with that new bolt-on that they're purchasing within the FedEx economy. But then you also have transferable work experience, which some lenders are okay with and some lenders aren't. Now, transferable work experience would be, for example, a retiring CEO who has managed a multi-million dollar company, has done great, and he's looking to now branch off into a different journey in his life. He's looking to buy something that he's familiar with, but it may be new. So, Northwest Bank, one of the things we're okay with is transferable work experience, but not all lenders are okay with that. So, for our viewers, I think it's incredibly important to make sure that they understand what direct and transferable skills they have when they're looking to purchase a new business, because that's going to come into question. That's going to have to be part of their credit memo. They're going to have to convince the lender that they are qualified to do this new business. It's funny. I had a conversation with a gentleman who was incredibly bright. He had a great personal financial statement. He made money, but he was buying a business in a realm where he never had any experience in whatsoever. So when we started really discussing that, and I started kind of pressing him and saying, "Hey, well, have you ever done this or this or this?" And he kept saying no to me. My first thing was, this is not the right business for you to buy. Right. So as a lender, we always want the deal, but I think we have an obligation to our clients to make sure we inform them on the right path and say, you know what, this might not be the best business for you to buy, because it's going to be a hard sell with our underwriting and credit team. But yeah, I think if you want to get into a different industry, my advice would be to learn about that industry. If there's any certifications you can get, if you can work in that industry for a little while, all those things will make your deal a lot stronger when you present it to a lender.
So, and me, this is one of the topics that always comes up for me.
Sure.
I have a group coaching program, and Angel works with a lot of our members of our group. And one of the things that I've noticed that you're able to do that some lenders don't is that you don't take the easy way out. Not every deal is going to be a cookie cutter deal. If I am an accountant buying an accounting firm and I have a strong balance sheet and my own, cash, plenty of cash in the bank, it's an underwriter's dream. They do no work, the deal is approved. But how often does that happen? Let me ask you, how often do you get a slum dunk deal out of 10 borrowers? How many are
Oh
perfect?
gosh, it's maybe 0.5 where a
Not
deal
even one.
is yeah, it's not even one. Yeah, I mean,
1%.
so Northwest Bank, we're a national SBA lender, but we're relatively new to the scene, but we are very aggressive in how we like to underwrite deals and what type of deals we'll do. But even with that aggressive nature of our underwriting and us making sure we try to find a way to approve a deal, it still takes a lot of creative thinking. It takes not just a lender that thinks outside the box, but buyers that think outside the box, and hopefully a seller that is willing to negotiate and kind of, work with us and try to make a deal happen. But yeah, every deal right now is a challenge. Once in a while you get those unicorn deals that are really clean, but there's so much that goes into getting a deal to closing. And any SBA lender will tell you, or anybody who's closed an SBA loan will tell you that it's a lot of work on everybody's end, right? But a good lender will help that person through that. They'll be available for buyers. They'll be available for CPAs, attorney. They really get involved in that process to make sure it goes as smooth as possible. But I wish I could say to you with a straight face that SBA deals are easy to get done, but they're not, right? Because we're doing the toughest deals out there, right? We're
It's a
doing
cash flow.
deals,
It's
it's
a just
cash
a cash
flow,
flow deals, airball deals.
right? We're doing deals with little collateral. We're doing deals that, again, that person may not have a lot of direct experience, right? So as a lender, it's our job to position them in the best possible life for underwriting so they can take this new journey, right? And be able to jump into this new venture, make it successful. So there's a really strong human element to that lending process. And that's what I try to bring to the table, you know, um, in every deal. And I'm not afraid to give a fast no or it won't work, because I want to make sure that it doesn't waste, the buyer's or seller's time, or the broker's time, right? If you give me a deal and it's not great, I'll let you know what the challenges are fairly quickly, right? Because I want to make sure people can move on to the next step or the next step and the next step. So yeah, again, to your original question, it's a very small percentage of deals that are absolutely perfect and go through fast.
Um, so staying on the topic of that, when you first, if I introduce you to somebody and you're very good at getting in touch with them right away, what is your framework, your mindset when you're talking to, do you put them through a journey? Like, what are you trying to ascertain first as you're talking to them? You're trying to imagine what their resume looks like, or how does Northwest Bank and your particular approach to figuring out how we can put a deal together works for you?
Sure. Yeah. My first step is to get to know the individual. I
Mhm.
really understand what their drivers are, why they want to take this leap, because it is a big leap. Owning a business is not a joke, right? It's sometimes, most of the time, it's the biggest purchase somebody will ever make in their life. So I
Right.
want to make sure that person's in it to win it. Want to make sure that person's in it for the right reasons. But the majority of the conversation is me, asking maybe some open-ended questions and just listening to what they give me. If we're at the point where they do have actual financial information, then we can dig into that. But really understanding what makes that person tick and why they want to do this. Um, I again, my goal is to make sure that if I'm lending money to someone and if I'm gonna do something that's gonna impact their lives and their families' lives, I want to make sure it's not going to go south. I want to make sure that they can be successful at this new venture, because if not, it's going to have a tremendous impact on them personally, financially, emotionally. And I think it's my obligation to vet every client I work with and make sure they're in it for the right reasons. The numbers are what the numbers are. Once we get the financials, that's going to be black or white, right?
Right.
There's very little gray, right? So if the deal works, the deal works. But at the end of the day, if I can convince somebody that maybe going to business for yourself isn't the right move, then maybe that's probably the right thing to do, right? Because they had those doubts themselves in their head. Right. So we want to make sure that not only as a bank we're doing really good loans that stay on the books, that don't go into workout, but we also want to make sure our borrowers are a good fit for those businesses. And sometimes that's not the case. You have to make sure you're going to be a good fit for the business, a good fit for the team that's there. Um, the fact that it cash flows isn't a be all end all. And that's what I really try to get into. It's not just about, hey, it makes a lot of money. Well, is this really the right business for you at this time?
Good point. I mean, it's one of the things that I teach is my students is, look, first we want to know there is enough meat on the bones on the deal, I call it.
Mhm.
If we're looking at a deal, all things considered, that is, giving us a 2-to-1 debt service coverage ratio. Okay. Now I can look under the hood and to see if I like what I see in the management and cross collateral and all that stuff. But
Mhm.
at what point if a deal is on the margins, it's a tough deal, what is the debt service coverage rate, the minimum that you guys would say, hey, we will go no lower than this? Is that, give it to me with real estate and without real estate?
Yeah, so one of the cool things about Northwest Bank is that, we're willing to look at a deal that can be a total airball or have no collateral at all. So we'll look at a deal up to $5 million, no collateral again, total airball. And we'll even do larger pari passu deals, or
Really?
we'll tack on conventional lending up to $3 to $4 million. So theoretically, we're kind of exploring now that lower middle market space where there's a big funding gap, right? They're not
Yes.
quite big enough for private equity. They're a little bit too big for SBA. So we're trying to really create a niche for ourselves. I mean, that being said, regardless if the deal is an acquisition for 500,000 or the deal is an acquisition for 8-9 million, we'd love to see a debt coverage ratio between 1.4 to 1.5 in the interim tax year and in the interim year and the most recent tax year, and then a 1.25 after that. So that would be like for 2022, for example. So we just want to see consistent performance over the last 3 years. Um, and most deals, if a deal falls in that, there's a high probability it'll get approved. Obviously, the bigger the deal, the higher scrutiny comes with the people who are buying the business, right?
Mhm.
So, is transferable work experience going to be enough for a $9 million deal? Probably not. But is it going
Right.
to be enough for a $500,000 deal? Sure, right?
Right.
So I think what's important for the viewers to understand that you may look at a checklist and you may have everything from A to B, but there's a lot more to it than that a lender will ask you questions, and everybody's credit box is slightly different. So again, if I get a big deal for $9 million, you can be sure I'm going to dig into the history, the resume, the management experience of this individual. And if it's not right, we're not going to do the deal, no matter how much it cash flows, right? So because we have to make sure it's the right fit, right? If they don't have a good integration plan, like what's going to happen when you sign on the dotted line? What's the plan to integrate yourself, right? There's a lot more to it, and some lenders go that deep, some don't. Um, I try to approach this conversation in stages so it's not overwhelming because there's just so much somebody has to think about.
Well, you're getting into you said a rare air now. Most SBA preferred lenders are comfortable in the 105 million up to 5 million. Then you just through purpose, which is a whole other realm of then you're able to buy businesses that are, we're talking million to 2 million in EBITDA,
Mhm.
and
Yes,
adjusted
very
EBITDA.
successful
So
business. Mhm.
when do you start requiring quality of earnings reports? QOB.
Well, believe it or not, I mean, there's no. So the SBA requires us to underwrite the tax returns, right? That's the important thing because, not only do we have to collect tax returns that are legible, that we can clearly read, um, but during the closing process, we'll actually order tax transcripts and they have to match what the tax returns say. Now,
Right.
quality of earnings reports, they're just a bonus for us, really, right? Hopefully, the tax returns show good cash flow, and if not, the quality of earnings report can help us kind of fill in those gaps as to why maybe it doesn't. But at the end of the day, we have to, most lenders will approve an SBA loan based on tax returns, right? That has to be the first thing we go to. So tax returns interim financial statements. So if you have a business owner that was playing the tax game for many years, he's going to have trouble unloading his business because it's not going to look maybe like they're making money, but maybe they were. So we don't require quality of earnings, but normally when you're talking to buyers in that lower middle market space, they're doing that due diligence on their own.
Right.
Right. So we don't demand a quality of earnings report. We don't even order one ourselves. Typically, the most we'll order is a business valuation report once a commitment
Yeah.
letter is issued. Um, but the quality of earnings report again is incredibly helpful. But I think that's a lot more helpful for the buyer, right?
Yeah.
To
To
make
validate.
sure,
Right.
yeah, to validate what they believe is there, to validate that the company is as strong as it says it is. It's also valuable for the attorneys, the buyer's attorney, the CPA, people involved in that transaction. Um, you know, if I was buying a business for 7, 8, $9 million, yes, I would pay the cost to do a quality of earnings report, right? I
Okay.
want to make sure that there's nothing I'd miss. So again, we don't require one. Um, all we do is a simple business valuation. But again, the tax return numbers typically have to work to make the deal happen to begin with.
Gotcha. All right,
Mhm.
man. Talk about going on a tangent. I haven't even gotten to your third question. So, but I love this. This is
And I
why
talk too
we're
much.
here. No, no, it's what we need. It's organic. All right.
Yeah,
So moving on to I have some fun questions at the end of my own. But
sure.
um, so you wanted to you thought it would be wise to talk about submitting a complete loan package and
Mhm.
how missing docs delay approval. Can you expand on that?
Yeah, so I know it's popular opinion that SBA is hard to work with, but there's certain things that hold up an SBA deal, and it's typically never the lender, because at the end of the day, they want to do the deal, right? It looks good for them to close. They want to close it fast. They want to move on to the next deal, but it can be the lender, right? There's some, like any profession, there's some people who are stronger at their job than others, right? So there's that human variability there. But the initial package is just being able to get the right documents for underwriting, or the right documents to have a review with your credit team. I mean, sometimes, asking for simple things like a profit and loss, or asking for, hey, can you generate a 2022 P&L and balance sheet for me year end, right? Sometimes those things business owners can't get a hold of, or a buyer can't get a hold of from the seller, right? So all these things can delay underwriting, and there's many a times. Um, it's very rare that a lender will submit a perfect package, right? Like they get it into
Mhm.
underwriting, the underwriter asks no questions, they want no further documents, right? That's the underwriter's job, is to scrutinize that credit. So the more information we can get at submission and during that due diligence process, the faster the approval can happen. Now, I've gotten approvals for acquisitions in fast as 5 days, 4 days. So it's very possible. But those borrowers were very organized, right? They had all the documentation ahead of time. They were able to understand what was needed by the bank. And I think it's important for your viewers to understand that if you're exploring this, every bank has different criteria. Talk to
Mhm.
them, find out what packages they're going to need, right? When you're ready to engage, make sure you have all those documents. A lot of them have checklists, right?
Mm.
And they can customize that checklist to what you want to do in your transaction. Um, but in general, the basic documents would be, 3 years of tax returns, right? Interim financial statements, a profit and loss and balance sheet. If the company has accounts receivable, so you would get an AR, AP
Aging and
report.
AP aging. Yeah.
Yep, yep. If you can get a hold of year-end profit and loss and balance sheets for the matching tax years, that's also very helpful, because you can see the differences between what they reported and
Mhm.
what the year end looks like. Um, Obviously, if there's real estate involved, you want the property information and things of that nature. So the packages for most lenders is fairly the same, but underwriting may require different things. So it's really about trying to foresee what they'll need based on the business you're buying. If you have a lot of account receivables and you don't provide an AR aging report, well, you can expect that deal to be delayed,
Right. But you don't
right?
really know what AR is over 90 or under 90.
Correct. Right. And all that's very important understanding, is the company collecting on their receivables properly? Do they have a lot of money sitting out there? If they do, why? The lender has to dig into that and understand that, right? Because that's going to come up with underwriting. So again, I think it's important for the viewers to talk to people, talk to individuals like yourself. If they're not working with you, or if they're working with another business broker or somebody in that field, to really understand exactly all the documentation they'll need. And especially for the sellers, before you list your business, make sure that the paperwork is in order. You know, in a perfect world, a lender or a broker should be able to say, "Hey, can I get recent months P&L and balance sheet?" And you should be able to get that at a press of a button or at a phone call with your CPA, right? We shouldn't have to wait 2 weeks to get it.
No.
And a lot of times, those waiting periods become a reflection of the lender, and that might necessarily be the case. And the same thing goes for closing. In the closing, the I say the equivalent with closing would be, if I say, "Hey, do you have your operating agreement?" And you're like, "Well, I don't have it ready yet." Okay, well, now you have to get with your attorney to get that operating agreement ready, right? That could be a
Okay.
week. That could be 2 weeks, right? And attorneys are very busy individuals. They have a lot of clients to deal with. They're gonna rank stack their work, and your operating agreement is probably not going to come in top of the stack there, right? They're gonna try to fit that work in. So again, having a good conversation with the lender about what's needed, I think, is the key there.
So a couple of follow-up questions on this. And before I ask you, I'm going to tell you a beef that I have with certain lenders. Okay. Usually, I mean, I exclusively only work with the national lenders. Hence, I work with Northwest Bank. They have to have a national footprint. They have BSBA preferred lenders. They have to know what they're doing, and it's evidenced by their turnarounds. I have worked with you on a bunch of deals. We work with each other very closely. I've seen very fast approvals. So tell our viewers, when you get an approval, what does it look like? What is the anatomy of the process? Do you first offer a letter of intent? You do a kind of a glossary look at the tax returns. I think I can do this deal, and you provide a letter. How soon after that, assuming everything is in order, you get a letter of commitment? When you get the letter of commitment, does that mean that you already have an SBA number? Does that mean that it's a guarantee to close? All of those things are nebulous for the average person to
Of
know.
course. Yeah, no, that's a great question, Leo. Yeah, so the way our process works is, once we submit a deal to underwriting, and again, at that point, my credit memo is written, I have all the financials I believe I need at that time. We submit it to underwriting, and we try to get every deal approved, denied, or at least get a maybe within 5 to 7 business days. So that's kind of like what our SLA is, 5 to 7 business days. And again, if there's a delay in that 5 to 7 days, it's typically because we might be missing information, or the underwriter is asking questions, and I have to communicate with the broker to get that answer, or the buyer or seller to get that answer. Once a loan is approved, we get a commitment letter out within 48 hours. And that commitment letter will have, terms, conditions, any stipulations on there, the majority of closing items, that the underwriter prepares. And then what I do is I always go over that line by line with the client, just to make sure they're comfortable with the terms and conditions. Um, Once they sign a commitment letter, that's really when the ball gets rolling. We start ordering appraisals, phase one environmentals if there's real estate,
There's real estate.
business valuations, right? I asked the customer to get in touch with their insurance company to get business hazard insurance, right? So what my closer will do is provide a list of items that need to be satisfied in order for it to be closed. Now, again, there's some in my history, there's some SBA deals I've closed in 2 weeks. There's some that take 3 months, right? It really depends on the complexity of the deal. It depends on what we're waiting for. In an example of a business acquisition, we have to wait for that valuation to come back, right? Most of our vendors take 3 weeks, sometimes maybe 2 weeks, but 3 to 4 weeks is like the average. Assuming there's no issues with the valuation, we just check that off the list and we keep going. But if there is, now you have to go back to the buyer and say, "Hey, there's a problem with the valuation," and they may have to renegotiate with the seller, right? So that changes a lot of
So
things
let's
there.
let's pause there, because I want to make sure I want to get
Sure.
it. So the letter of commitment from Northwest Bank,
Mhm.
does that mean that the bank is saying, assuming the documentation will back up the claim, we are pledging themselves to fund this deal? Does
That's
that
correct.
Now, does that mean they already have a commitment from the SBA on the back end, on the back office? They already have a digit code, or
Yeah.
how does that work?
Right. No, not yet. Not yet. Typically what happens is that once that closing checklist, which could be 10 things and could be 20 things, once that gets to like the last one or two, That is when they get the SBA number. That happens through the E-Tran system, and that's actually very quick. I mean, the SBA has turned those around in like 24 hours and sometimes same day.
Really?
Yeah. So as a preferred lender, we can approve our own SBA deals, right? So we put those in the E-Tran. We get those SBA numbers sometimes same day, sometimes in 24 hours. It's very rare it takes longer than that. So so normally that's not what holds up a deal. The biggest drivers of a deal not closing are
So, all right. Are you stuck in trying to figure out how to actually buy a business? After watching many videos, you don't know whether to make an LOI before you do the deal analysis. So you talk to a lender before you analyze a deal. Can you get away with having tax returns or no tax returns? What should you say to a broker? And many more questions that I'm sure you have. I am putting it out there for you to get together with me for a complimentary free coaching call and to figure out where you are in your journey, how I may be able to help you buy a profitable business this year. Connect with me. Email address is down here and up here, or you can drop me up a comment. Let's connect.
not getting the correct documents, right? Or the documents being incorrect. So for example, I can't tell you how many times I get an operating agreement that isn't signed. That's a problem, right? It should be signed. A lot of buyers or sellers, what they'll do is that they'll get their operating agreement from their attorney and they'll just stash it away in a drawer and it's all good, not realizing it's a document you should sign, right? So now we have to get that signed, get it resent. Attorneys, I have great relationships with a lot of my attorneys, but attorneys are protecting the interests of the buyer or the seller, or our attorneys protecting the interests of the bank, right? So if there's something not right in that triangle relationship, that could hold up the deal. So really making sure that buyer and seller, they're on the same page with their attorney, right? If buyer and seller agreed on clause A, which might be weird and quirky and maybe never happened in the deal before, well, they all need to be on the same page. It shouldn't come up at the 11th hour, right? A week from closing, right? And things like that happen. Lease issues will hold up deals. Most lenders will require what's called a landlord lease waiver, which gives the bank the access to the property where their collateral is located, right? Many a times a bank will have their form letter, and I'd say more often than not, a landlord or a big property management company will want to modify that letter. Well, they'll want to modify that legal document. So now you have the bank's attorney talking to the landlord's attorney, right? That could be delayed, right? So one of the ways I try, for example, to avoid that is as soon as the commitment letter is signed, if I know there's going to be a property that's being rented, I provide that template to my client, to the broker. If I have access to the property management company, to them, and say, please let me know if you see any issues with this that we can address right away.
Right away.
Because there's going to be a delay, right? So a lot of the speed of closing is going to be driven by how well lender, broker, seller, buyer, attorneys all work together and how well they communicate. So that's really one of the key things there. But yeah, there's so many little things that can hold up a deal. And then I just mentioned some of them there.
So from the time that your bank issues the letter of commitment and we're ready to do this deal, and you assign a closer, which I love, that's why I love there's the department of closing department. On average, how long does it take? Assuming that everything is there and there's no issues, what is a natural timeline to close?
Oh, I say it's realistic to close a business acquisition in 45 days, 60 days. I say that's totally realistic.
From the issue of the letter of commitment.
Correct. Right. And this is assuming, again, everything is in the perfect world, perfect, right? You know what I mean? Like the lawyers are cranking it out, sellers motivated, buyers motivated, documentation is correct, because again, what happens is once I get paperwork, depending on who's involved in that closing on my end, and it could be a third-party vendor attorney we hire, or it could be our closers, or a combination of both, they're reviewing all these documents and making sure they're within SBA guidelines. Right. So as long as that process goes smooth, you can close a business acquisition in 45 to 60 days, sometimes even quicker. Again, it's really dependent on the people involved in the transaction, lender included. And I'm not perfect. I'll tell you right now, I've caused some of my own deals to be delayed because I might have missed something or I thought I sent something and I didn't. You know, that's just a human component of the transaction.
There's a lot to
Um,
worry about. And I
yeah,
always,
yeah, it is.
you think a business transaction is difficult? Think of buying a house on steroids. I mean, at times,
Hmm.
10 times the paperwork and the people involved.
For
That's what
sure,
it's
for
like to
sure.
buy a business. And it's not to be taken without help, or don't try to do that on your own without advice. The people
Hmm.
like me, that's what we're here for, to help you shepherd the process. One thing that you mentioned embedded in the prior conversation was working capital. And it dawned on me. So whenever you and I talk all the time about, okay, maybe we should provide a runway for payroll for the next day or some type of working capital. How often does that
Hmm.
happen on deals? And how do you guys calculate what a good working capital would be on a purchase?
No, it's another great question. So, so the first thing I start off is, obviously when I understand the transaction and what's needed, as an SBA lender, we try to finance all the closing costs in. So that's kind of like the first step of working capital. So we'll finance the guarantee fees, packaging fees, appraisal fees, valuation fees, as much as we can understand what's going to be there up front, we try to finance in. Now, when it comes to working capital, I make it a point to really understand the cash flow cycle of a business, right? I think that's the most important thing, right? For, obviously the simple example is a pizza shop, right? There's not much of a cash flow cycle, right? They buy products, they make it, they get cash immediately, they rinse and repeat. But when you're looking
Mhm.
at a manufacturer or you're looking at a SaaS business, an online business, or you're looking at a doctor's office where they have insurance companies paying, right? Some of them may have private pay, right? You want to understand what that looks like and try to calculate a number that's going to give the borrower at least good 3 months of working capital, right?
You aim
Now,
for 3 months of working capital.
I try to aim for 3 months at least of working capital. Now, also too, it's important that if the buyer can negotiate with the seller to leave working capital in the business. I think that's super important, right? You don't want to buy the business on day one and not have any operating capital, right? And most banks will be happy to um, supply that. But if
Mhm.
you're a large business that's 7, 8, $9 million, you may need $1 million of operating capital,
You
right?
guys
You may
go
have
by the
30, yeah, you
yeah.
may have 30, 40 employees, right? So I think, I think it's important as a lender, and as a, again, in your position to understand, hey, what does your cash flow cycle look like? What do your receivables look like? What do your payables look like? How much money do you need to have this thing running efficiently for 3 months? And that's kind of the target I hit when it comes to working capital. And we can provide that in the sense of permanent working capital, like cash being put into an operating account at closing, or maybe a line of credit, revolving line of credit. Um, we're big fans of tacking on a line of credit with an acquisition.
I
We
like
love
that. I've seen
we
it.
like
Yeah.
yeah, we like to do that. We think it's the best move. If they don't use it, that's even better. But we like to tack it on in case it's there because um, how I went back to integration, I think a lot of buyers don't realize how hard that integration is once you close. Once you close on the dotted line on that paperwork, you have a whole other job after that, right? And that's um, dealing and learning this new business now, in the short amount of time to make sure you're not losing a ton of money, right? So sometimes there's more expenses there than they realize, and I think that working capital is really very helpful.
Everything, I always tell people, everything takes longer than you think it does.
It
Everything.
does.
When it comes to mergers and acquisitions,
Sure.
we're in a
Yeah.
different timeline altogether.
No. Yeah.
Um,
Yeah. Yeah. And I make it a habit of giving customers like what is the worst case scenario? What's the worst possible things that can happen during this journey? I try to prepare them and I try to avoid them as much as possible. Um, and I think I do a fairly good job of doing that. But there's always something that happens. There's always something that comes up that you have to pivot and you have to be able to think on your feet and adopt very quickly.
all right. Okay, great. Let's moving forward. So I'm going back to to our topic list. So loan closing challenges. Okay, loan closing challenges and deal killers.
Mhm.
Borrowing equity. So let's number one is borrowing equity injection and cash availability.
Mhm.
So let's talk about how can that be what have you seen out there that you can coach our people that are watching
Sure.
today?
Yeah, yeah, yeah. So, one of the first things most lenders will ask once they start digging into the transaction is how much equity or how much cash do you have on hand to make this purchase? Okay. Now, the SBA is a fantastic product and it gives people a lot of flexibility in how much cash they have to put into a business. It is possible to buy a piece of property or a business without putting a dime down, right? It's very possible. But most banks will want to see that you have that cash available, even if you don't need to use it for the transaction. But again, every lender will ask, hey, how much cash do you have to put down? Some lenders are perfectly fine working with the 10% equity injection. That is the minimum requirement for the SBA in the SBA SOP. Some lenders will want 15%. Some lenders will want 20%. Some lenders are okay with doing a deal with a full seller's note on standby. Some lenders won't do a full seller note on standby, right? So it's important for the viewer or the buyer to understand, who they're working with and does that lender fit what you're trying to accomplish. But I'd say the most important thing is making sure that when you're ready to buy a business that you have access to this cash. Okay. There's been a couple of times where the borrower may not want to tell me something happened with their cash or something has delayed their access to the cash. Maybe they go borrow the cash. And that's probably the worst thing you can do to your deal
Mm-hmm.
because it's definitely going to delay it. It's very possible it could kill the deal, especially if you don't have the ability to pay that other note, right? Because now we have to calculate that new loan that you just took out, whether it be a home equity, a loan from a friend, a personal loan, an investment. We have to understand the structure of that agreement, right? And we have to include that in the underwriting. And that wasn't there when we first approved the deal.
Because
so
people change and they change, they actually change the deal without telling you. But
right.
incidentally, people ask me a lot of the comments in my videos, well, sourcing for cash. Like, what
Mhm,
are acceptable down payment? Can you take a gift, a HELOC? Can you
mhm.
bring a partner? Can you bring sweat equity and a partner brings the 10%? How do you weigh all that?
Yeah, so just to correct something that I might have given the viewers a wrong impression. You can get debt equity to purchase a business, right? But it's more about how you do that, where that money's coming from, what are the terms and conditions, right? But the buyer, broker, you know, it's almost like that attorney client privilege. You have to be able to tell us everything, even if you
Mhm.
don't want to, right? As a lender, we want the deal to go through.
Right.
Like we're all self-serving in that sense that we want to close this deal for you, right? So it's one of those things that transparency and that openness between buyer and lender is key. But you can buy a business with investments, you can buy a business with for 401ks, you can borrow money from a home equity loan to buy a business, you can get gifts from your family. I mean, there's so many creative ways to bring up that equity, and that's a conversation you want to have with the lender. But if you're coming to the lender with no money at all, you might want to postpone that conversation because the lender's most likely going to say, well, how much money do you have laying around? And and if you have somebody who's investing in you, right, they're going to ask, well, what do they want out of it?
Mhm.
Right. Like for example, I had a deal I'm working on where it was a fairly large deal. We have it was a partnership, and two of the partners who own less than 10% are providing the majority or basically all of the down payment. And we're talking about a humongous amount of money, right?
Hmm.
So as a lender, the red flags go up because I'm like, well, what are they getting out of this? Why would they give up this much of their cash to help our guarantor buy this business? And the guarantor had like $500,000, so he was definitely comfortable himself. But we really had to dig into why are they partnering up? What is the relationship? How are they getting paid back? When are they getting paid back? Right? So it's the equity injection portion um, can be more layered than just, hey, I have this cash. Most lenders are going to ask you where it came from, right? If you've had it there for 6 months, a simple bank statement shows that. conversation's over, everybody's happy. But it's okay if you need to get money from family or friends, or if you have an investor coming in who wants to be part of your journey and part of this project. We just have to know that from the beginning, so that we can manage that package and talk about, hey, what's the best way to approach this equity injection. But having cash or changing the deal or changing or not letting us know that you may not have the cash towards closing, those could be deal killers. And that puts a lot of stress on everyone, including sellers, attorneys, CPAs, and it actually ends up costing everybody more money
Right.
to close the deal because it delays it.
This thought just came as you were talking. It's not on the list of questions, but it happens to me. I've seen it a lot. When you start, you underwrite the deal, you spread the deal, you test the deal, and you look at the interims, and everything is looking great. Nice 10%, nice progression of 10% year-over-year revenue. Nice margins, nice SDE, it looking good, and then at some point in the interim, revenue starts to drop. So brings up the question, how do you deal with decreasing revenues either on historical or in the interim? And how do you have those conversations? What kind of conversations do you have with the buyer about when you spot check? You're gonna say, hey, because banks will say this set of financials is good for 60 days. After that, if we don't close, I'm gonna have to get another quarter. How do you deal with that?
Yeah, so the SBA requires that financial documents are no more than 90 days old. So,
Okay.
so again, it's in everybody's best interest to try to get the deal closed as efficiently as possible. I mean, but when I look at financials, if I see that a business is on a downturn, it doesn't mean a deal can't get done, but we really need to understand why that's happening.
Mm-hmm.
It could have been a huge one-time expense. It could have been owner got sick for 3 months and the business took a
Mm-hmm.
dive. Like there's so many things that could happen. So my job is to again understand that story. Hopefully I get the transparency from the buyer and the seller as to why that happened. And then my job is then to sell it to my underwriting team and say, hey, look, yes, this is happening. We bring it up, we talk about it, we talk about a way to mitigate it, what the future looks like, right? Which we can see in business plans or projections, which a lot of times a business acquisition will need anyway. But we can tell that holistic story to say, hey, yes, this is happening now. Here's why it happened, and here's why it's not going to happen again. And if it's something that is permanent, then we just deal with it, right? We face it head on. We try to find a mitigant for it. I think if you try to kind of bury it in the numbers or bury it in the noise of the deal, one, it kind of eats your lender equity up, which is what I call, every lender has equity with their underwriting team, right? And their
Mm-hmm.
leaders, right? So if, you're not presenting deals the way they should be presented, or you're not mitigating challenges, or you're not bringing things to their attention, that nicks at your equity, right? So that when you have
Mm-hmm.
that tough deal and you really need to lean on your people to kind of give you that one grace, right? Or look at it
Yeah.
something a different way, they may not, right? So I
Trust.
think yeah, that trust exactly. So it's okay if business has up and down performance. I mean, I've been able to finance a lot of businesses that 1 year is great, next year's lower, 1 year is great, next year's lower. It's just the cycle of the business, right? So as long as we can show what's happening, typically it's not a huge issue. Now if it's a tremendous drop,
Right.
obviously that's cause for concern.
Right.
Um, and sometimes the price of the business will reflect that, right? Like the price of the business will reflect that the business is on a downturn, which then helps us.
And we would have to go back to the negotiating table and see how we can make it work, which actually
Sure.
meant helping the buyer or helping the seller, depending on how it's
Mhm.
structured.
Yeah.
Okay, so let's get to some fun questions. I think we covered now.
Okay.
I mean, I love this. So, biggest deal you ever done?
Um, let's see. Well, I'm working on one right now for almost $8 million.
So you got a
And
5 million SBA loan plus a two and change
yeah.
million purpose of the situation.
Yeah, yeah, and we have a term sheet out, so we're just waiting for the the borrower and the seller to say, hey, let's rock. But that deal, we don't issue term sheets lightly, right? When we issue a term sheet, there's a 95% chance it's going to close, right? The only thing that'll change that if something happens, right? Something change, a material change in the deal, right? Like let's say the buyer doesn't have equity anymore. He doesn't have any cash. That's a big deal,
Right.
right? You know what I mean? But yeah, that's probably been the biggest deal. I've been blessed in my career that I've worked on acquisitions as small as 50,000 to 5, 6, 7, $8 million. You know what I mean? But they all kind of work the same. So,
Awesome. Well, great. All right. Next question. Hottest industries that you've seen in the last year?
oof. You know what's funny to a lender? To my personal opinion and the way I look at it, I don't ever think any industry is hot.
Because you're agnostic. 'Cause you
Right.
you don't
Yeah.
want to
I mean,
peg
I mean,
yourself.
now don't get me wrong. If I was on the brokerage side and I was selling a business, I'd be like, "Ooh, I want to sell this business," right? Because I know I can get top dollar for it. But as a lender, I really have to be very neutral. You know, just like anything in life, everything's cyclical, right? So like, just because it's fine now doesn't mean it's going to be fine 3 years from now. So I really try to stay in the medium there and try to understand, okay, what is a worst case scenario situation? Let's model that out to see what it looks like. Um, it's I look under the hood, right? I'm definitely an optimist, but when it comes to credit, you have to be both an optimist and a pessimist and be
Right.
able to look at things half full, half empty. So it's one of those things that I honestly don't know what the hottest industry is right now. I mean, luckily for us, we're pretty agnostic. I mean, we're not shunning away from hotels or gas stations or breweries. We're still doing those type of deals. Some banks aren't. So if it cash flows and it makes sense, we'll do everything in our power to try to approve the deal. Recently I just got a small microbrewery approved, and for under half a million. And we both know microbreweries have had this up and down performance over the last 5 to 6 years, right? And there's a lot of them that shut down. Do you know what I mean? So microbreweries right now aren't sexy, but there's still a lot of great microbreweries out there, and there's still a lot of great owners that can still make a good amount of money and keep their business, very strong. So,
Okay. Um, Fine. Funnest deal you ever done?
hmm. Oh gosh. You know what, Leo? No SBA deal's fun. That's not true. That's not true.
You're
That's not
scaring
true.
people.
Oh no. I mean, so I was able to get like a FedEx route approved like in 4 days. So I was
FedEx
super
route.
excited. Yeah, so I was super excited about that. Uh, that deal didn't close, not because we did anything wrong, but because something happened with the seller that we found out some stuff. But I would say that's probably the funnest, just because of how well prepared the client was.
Hmm.
Right, my underwriting team was on full cylinders. They got back to me fast. They had great questions. So it was one of those things that it was just such an efficient package. Everything worked out, and honestly, I don't take the credit for that. I mean, that's the client being very well prepared, right? Giving me everything I need, and that's underwriting doing what they do to make it happen. It's definitely 100% a team effort. The lender is just one part of it, but you have to have everybody working on all cylinders to make it go, make it go through quickly.
Well, I mean, you wouldn't be here in my channel if I didn't trust you. I mean, we're gonna have work. I told you, I invited you to because I trust you. And I think I'm sure that there's other questions. Anything that you want to our viewers to know about you, or obviously, we're gonna list your contact information. It'll be
Sure.
in the description section of this video. What would you say to anybody? Hey, they want to work with you? Some final closing remarks, that sort of thing.
Yeah, I would say if you're interested in buying a business, make sure you connect with somebody who is a leader in their field, like a Leo who understands how to run a business, how to manage a business, what to look for when you're buying a business. Talk to different lenders, right? Not all lenders are created equal, not all lenders are the same. you know, Make sure you get a good vibe for that lender you're working with. You want to make sure that that they have your back and they're gonna try to do everything they can to get your deal approved. Um, and I would say have fun with the process. I mean, you know, buying a business again, it's incredibly scary and it's probably the biggest purchase people are going to make in life. But it's one of those things that it's lenders have a great feeling when a deal closes because we know we're impacting somebody positively and we're changing their life. And all lenders want to get your deal closed, right? There's not one lender in the country that doesn't want to help you get your deal closed. So if you can help us do that, we can make these things happen really fast for you, and overnight can change your life. And we love to do those things. And especially I do. I love those relationships. As far for your viewers, they'll have my contact information. I'm happy to have just a conversation. If you need advice, feel free to call or email me or text me. Um, I just love helping people, right? Even if we never get a deal, I just love helping. So if you have any questions, feel free to reach out and I'll be happy to give you some time. You can set some time up on my LinkedIn page. You can set up an appointment there. But I just want to make sure that people are as informed as possible to make the right decision.
Great. Well, it was a privilege and an honor to have you on my channel, Angel. I look forward to a long-lasting relationship with you, helping
Yes.
both of us have the same goal in mind. The reason I created this channel was to help enough people buy their business, a profitable business, and a legacy of wealth for their families, so they can pass it on to their children if they want to. So, thanks
100%.
everybody for watching today's video. And again, contact information for Angel will be at the bottom, the description section of this video, or reach out to me. I will introduce you to Angel, and Angel will get right on it. Thanks, everybody.
All right. Thanks, everybody.
Okay. Bye-bye.
Bye.
For a limited time, I'm giving away my cash flow calculator workbook, what we call the Deal Analyzer 2.0, which at the latest count has been downloaded 2,500 times. This tool is necessary and even critical if you're trying to analyze a deal to make sure if it makes any sense to make an offer. Now it has over 100 formulas and help you in guiding you to buy and make the perfect offer and get that pre-approved by an SBA lender. Also, I'm giving away my buyer's checklist. This is a 6-page document that I've used over and over again that people inside my group use to actually track along when they're trying to buy a profitable business. All this too will cost you hundreds, if not thousands of dollars, but they are my gift to you for watching my content. Thank you so much.